It seems relentless. Is there anything which can possibly, right now, halt this? I'm not going to say king dollar, but I have said it now. But anyway, the strength of the dollar.
Well, in terms of the framework on the dollar outlook, what our FX team highlights is that there are two key things that they're watching. One is that they want the Fed rate hike expectations to peak. And second is they want rest of the world's growth to bottom out. So now I think on the Fed rate hike expectations, as far as our forecasts are concerned, it is pretty much there. But I think the bigger story would be when do we see rest of the world's growth bottoming out? And in terms of our team's forecast, we have that happening in the first quarter of next year. That is going to be led by China. And China's outlook is pretty much dependent on whether and when they make that transition to living with COVID.
And you're saying this is by far the most important policy tool that they have, right, Chetan? How quickly do you think things could improve once they do reopen the borders?
So we think that they take their policy decision in two steps. So after the party Congress, we think they will guide the nation in terms of having to make that transition. They could sort of make a proposition by the fact that, look, now the virus has diluted itself. They have the vaccines. They have the post-infection treatment. They have made the arrangement in terms of the hospital capacity, and therefore they need to make the transition. So we would hear the policy statements indicating that they need to make that transition in around November, December. We would also be watching for additional new campaign on picking up vaccination rate for elderly population, and then make that broader transition more nationwide sometime in March, April. What we are also watching very closely is whether they are going to allow the mRNA vaccine to be distributed within their own country. We've already heard over the weekend, as you guys have covered on Bloomberg, that it has been launched for emergency purposes in Indonesia.
Chetan, okay, you mentioned Indonesia and you mentioned the region here. We look at Southeast Asia in particular. You see the depreciation of the various currencies, but on a trade-weighted basis, this is not really playing out, isn't it? Because, I mean, ultimately, these goods that are exported are cheaper in dollar terms.
Yeah, no, essentially the reason why we think that this is not 2013 or 1997 for Asia is because the macro stability indicators are in a pretty good shape. So unlike 2013, for example, which is the recent cycle, before that, there had been huge misallocation in Asia. Most governments had taken up large fiscal expansion. Central banks were running negative real interest rates. Current account deficits were widening and inflation was rising. So we don't have that kind of a situation right now. We do have some rise in inflation, but that has been largely driven by higher commodity prices rather than domestic misallocation within Asia. So that's the reason why you are seeing that Asian currencies, while they are depreciating against the dollar, on a trade-weighted basis, they are pretty much flat in this cycle compared to what you had seen in 2013 or 1997.
So, Chetan, that leaves a lot of still questions about what central banks in this region can do, right? Is it just fighting a losing battle by hiking rates continuously, or are they going to have to do something more to try to stabilize their currencies?
Well, we think that the central banks in the region have now gained some monetary policy independence, and they're going to take their decision on the basis of domestic growth and inflation dynamics rather than currency depreciation. Now, of course, currency depreciation does have some effect on inflation, so to that extent, they have to consider currency depreciation, but to the extent to which, our analysis shows that the pass-through of exchange rate depreciation is not that significant, we think bulk of the policy decision is going to be based on domestic growth dynamic. And considering that, we think Asian central banks will be taking policy rates much closer to, more closer to neutral rate rather than having to go into deeper restrictive territory like what we are seeing in the US. And the side effect of that will be that the currencies will be depreciating. But again, it's going to be much more manageable compared to what you're seeing in Europe and UK.
I was going to get there. Should I expect then the dollar pain to create a little bit more, I guess, of a challenge for DM versus EM then?
Yeah, as far as the currencies are concerned, yeah, our teams are expecting some further weakness in Asian currencies, and that's premised on the fact that their call for dollar, i.e. DXY, is that it will rise to 118 by year end, and so there will be a 10-net impact on Asian currencies, and we are expecting modest depreciation across the region.